Greetings, members one and all of the Salivation Nation. Silver is doing fairly well. It's still going up in price a bit here. Is silver gaining strength? Sustained strength? We shall see. The gold to silver ratio is tightening a bit. And so let's explore gold and silver prices and all that encompasses them. Yes, this comes to us from Market Watch. Silver closes at a 13-month high as gold ekes out a bit of a gain. Let's take a look at this here. Silver futures settled at a 13-month high on Monday, outpacing the strength in gold, which saw prices eke out only a modest gain. Rising geopolitical worries on the back of Iran's seizure of a British-flagged tanker as investors look for major central banks to ease policy provided support for the precious metals. And here we see a chart of silver here, and it's moving on along here. Really quite fascinating to see it go up this high over the past year. September silver rose 21.6 cents or 1.3% to settle at $16.41 an ounce, logging the highest finish for a most active contract since June 22, 2018, according to FactSet data. The wind is now at our backs, and we believe that both gold and silver will climb higher, Maria Smirnova, senior portfolio manager at Sprott Asset Management, wrote in a recent report. Silver, in particular, has a potential to outperform gold significantly, she said, noting that the gold-to-silver ratio recently hit a record of 93-1, meaning that it took about 93 ounces of silver to buy 1 ounce of gold. And this leaves significant room for silver to run. The annual silver market is only about $15 billion of value, and it does not take much to move silver's price, Smirnova said. Silver demand is already making a stealth comeback, with the U.S. Mint reporting a 43% increase in silver coin sales year-to-date as of June 30th. And with ETFs gathering steam, if this investor interest continues, it will definitely push the silver price higher. I'll also note and pause here to say that, it could be the big rise we saw in gold over the last few months. That in some ways it may have been an overreaction, it may have been overvalued. So I think that's one of those things where, an unusual circumstance, now people are kind of looking at silver, especially in the futures market and the ETFs, the way to be able to just use that, knowing that silver's market value is so much less than gold, as far as the, with the in comparison, it's quite interesting. And that is one thing about silver's. In silver's favor is that potential. And I do believe really it is in many ways undervalued. In fact, several viewers have said, and I have agreed with for the longest time, until really more last year, that anything below $20 an ounce for silver is a good deal. I sort of have taken a recent stance as of late that within the last year or so that may not necessarily be my viewpoint on silver, because it's sort of been changed, a shift in its in the view of silver as being a commodity. But so it'll be interesting to see how it all plays out, and from here, and I think that's kind of what we're seeing, even from the commodity side, an increase. And so investors are out there trying to take a look and find a way to try to make some money off of silver. Gold for August delivery in the COMEX, down 11%, climbed by 20 cents, or less than 0.1%, to settle at $1,426.90 an ounce. Prices on Friday had touched an intraday high above $1,450, the highest such level since May 2013, before settling down by 0.1% on Friday. They remain close to the more than 6-year high of $1,428.10 they settled at on Thursday. The price of gold has picked up strongly since late May as concerns about weak global growth and rising geopolitical tensions in the Middle East encouraged demand for safe havens, wrote analysts at Capital Economics in a note. In addition, investment demand has been spurred by an explosion in negative yielding debt, and there has been a stellar demand from central banks. But the analysts expect gold prices to stagnate over the remainder of the year. They argue that investors will need to factor in shallower rate cuts than currently anticipated by the Federal Reserve, and they've also penciled in weaker physical demand from Asia in response to an increase in India's duty on gold imports. So that very well may be. That's one reason why we should pay attention to these worldwide activities and geopolitics. And this is one thing with the duty on gold imports. In other words, that's a tax that India is providing on gold imports. And gold is very popular in India for cultural reasons as well as being a safe haven. Gold last week climbed above $1,450 an ounce on an intraday basis to expectations grew for the Federal Reserve to cut interest rates by as much as a half point at its July 30th to 31st meeting. But gold subsequently pulled back after the New York Fed said bullishly interpreted remarks by its president, John Williams, weren't meant as a commentary on policy action at the July meeting. I wouldn't be surprised if they cut interest rates by a quarter point, but not a full half point. Now, by the end of the year, it may be a half point. Still, investors look for the Fed to cut rates by a quarter point next week, while the European Central Bank could signal this week that it's preparing to take additional easing measures in the coming months. Iranian forces on Friday captured British-flagged oil tanker in the Persian Gulf, and oil futures rose on Monday. Iran's confrontation with the U.S. and the U.K. will probably escalate in the coming weeks, with the concern of the marketplace being a major U.S. military strike against Iran, which could disrupt oil shipping in the Persian Gulf. Such would be bullish for the safe haven metals, said Jim Wyckoff, which is a senior analyst at Kitco.com. And also, the latest news in Iran is that Iran is claimed to have arrested and even executed some supposed CIA agents. The Trump administration and American diplomats say that Iran has a long track record of lying. And I do agree with that. They do. In fact, their video showing the launch of the taking it down on the U.S. drone was from 2018. In other metals trade, October platinum was up 0.01%, added 60 cents or almost 0.1%, did $852.70 an ounce. September palladium was up 1.19%, which is up to 1.4% at $15.29 an ounce. Copper is down negative 1.22%. And but let's take a look here at the prices for gold and silver and all the metals here. Let's refresh these markets prices here from Kitco. Gold is the only one that's down a bit. All the other metals are up. And the biggest mover was palladium, $15.36. Platinum is $851. Silver's at $16.44. Resistance meaning around this area, or $16.50. If it holds there for enough, then we could see movement upwards in silver. We shall see. It's quite interesting and fascinating to see how these markets are moving. And what I'll refer to as maybe a correction for silver, but it still doesn't take away my views. As we take a look here at the gold to silver ratio, now squeezing ever so tighter. You know, it was at 88 before. Now it's at a solid 87. In other words, 87 ounces of silver to buy 1 ounce of gold. And it could mean that this could tighten up even more. But I believe that a lot of that is because of the trading in the electronic markets, and I think we'll continue to see that play out. And as people taking advantage of the narrow silver market and silver as a commodity. Now, this movement, I believe, in silver being looked at it as a commodity with traders, will potentially, especially if we see this ratio tighten up even more, based off of these signals, and under normal situations. When I say that, I'm talking about in comparison to what happened in 2011 when the ratio tightened greatly, and in 1980 when the ratio tightened greatly. Take those two scenarios out, and the law of averages taken into effect, and the average being about between 50, 55, maybe even 60 to 1. I believe we'll be hard-pressed to see us get down to those levels again with silver. But we'll see how it plays out. It is interesting. With that being said, the markets are what they are. They're moving. And if silver does reach that point and gets up to close to $20 an ounce, I believe you'll see a great excitement in there was no other term to use that I can think of, the stacker or investor factor, or that arena, you and I, people who stack the physical metal. And I believe that will be quite an interesting, exciting thing to see. It will occur under what we like to refer to here as the natural market conditions rather than the exceptional market conditions, which is what we saw in 2011. Many of us who were around paying attention at the time thought that 2011's activities were the beginning of the new normal. Turned out not to be the case. So we shall see how it all pans out. Very interesting and fascinating these markets are. Silver is gaining strength. Will the strength continue? You know, I'm kind of a little bit skeptical to say so, but I believe it's exciting to see it occur. The silver prices rise, but they could be smashed right back down. And by the way, they could be smashed right back down by natural market forces. People, you know, taking a quick short here, shorts buying and short selling in the ETF futures markets, and then sell it off, and the prices could go right back down to $16 and $15 potentially down the road. And that ratio widened because gold, I still believe that gold is the ultimate safe haven. Silver's a bit more volatile. We've seen that for the longest time, except for times of stagflation, for lack of a better term, when the silver markets react for long periods of time without much movement at all. Typically, the price is lower. So there you have it. What are your thoughts about the gold to silver ratio tightening a bit? And do you see strength in silver? Is this something that is sustainable? We'll find out. It's interesting indeed to see. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.